Hey everyone, how's it going? This is Richard and welcome back to our stock market outlook video sponsored by MarketSmith. As always, we'll run through the major indexes and talk about the overall health of the market. At the very end, I'll give you kind of my take on how I see things and what to look for next week. So if you do enjoy my analysis at any time, please go ahead and leave a like down below in the video. It's completely free, just takes a second. And if you want to see more videos just like this one, as well as tutorials and interviews with top traders, go ahead and hit that subscribe button. With that said, let's jump right into the NASDAQ composite. First things first, looking at the trends in place at this moment, we are just above a declining 21 EMA. That's kind of my short-term or intermediate term trend indicator. We remain below a declining 50 and 200 SMA, so the longer term trends are still negative. And there's still a lot of work to do before we're in a new bull market. However, in the very short term, things are looking somewhat, productive. That's definitely fair to say. We had a big upside reversal here on this day. We gave a lot back this day, but then we hung in there and held it and are back above this short-term kind of consolidation period. So I really like the action on this Friday outside day and an increase in volume as well. And if we go over to the S&P 500, you can see that this actually fulfilled the criteria for a fall through day as it increased, looks like 2.37% on a pickup in volume. Keep in mind, this was OPEC, so there's a lot of added volume on this day. So I really do want to see a sustained move upwards to really say that, a tradable rally is in force, as well as individual stocks acting well. I think that's extremely important. But going back quickly to the NASDAQ composite, what I basically want to see at this point is for us to push higher and then basically do a retest consolidation and continue to kind of form this trend of higher highs and higher lows, get above this significant level, and also have the 50 SMA kind of, curl up and break through that as well. And I want to see that 21 EMA start to support price as it's done previously during strong uptrends. So still a lot to see here, and tech in general isn't really leading as of this moment. There's some stronger areas of the market, especially in the energy space. But this is kind of a proxy for growth stocks in general. So that's why it's always good to keep track of this chart. But overall takeaway is still a lot of work to do, but definitely promising action. And based on the short-term momentum from Friday, the expectation would be for that to continue, at least in the short term, and at least challenge kind of these areas on the chart right here, fill this gap potentially, and we'll have to see what happens after that. So going back over to the S&P 500, as I mentioned, this is pretty similar, a little bit stronger maybe on this last day. You can see the volume increase was higher, nice outside day. And once again, I'd love to see a push upwards, then a pullback, and then for it to be supported against that 21 EMA and for that 50 SMA to kind of curl up here and for us to get back above that key moving averages. We remain in a longer term downtrend on this, basically this index as well, below declining 50 and 200 SMA. So until that changes, it's still, just a tradable rally, which you can take advantage of, but you don't want to get carried away and, go full margin, full exposure all at once. You want to practice progressive exposure and kind of roll your profits from one trade to the next and slowly increase that exposure as the market rewards it. So I think that's a really key thing here. You don't want to get, carried away and think you've missed the bottom, because in truth, it's not about catching the bottom. It's about catching the trend. And if it doesn't materialize, then you just got to kind of wait for the next one. But if we do get a nice trend, like we saw, in this area above an increasing 21 EMA, we had it right here above an increasing 21 EMA. That's the type of move that we can take advantage of. And that's really what I want to see at this point. And we just have to basically let the market tell us what it's going to do. So with that said, let's move on over to the IWM. Take a look at small caps. You can see that we just barely undercut that on this day. Once again, a nice big upside reversal outside day here. A little bit weaker maybe in terms of recent action. And we're just at that 21 EMA. It looks like we're just peaking above it. But once again, I want to see a nice move upwards for us to be supported. The 50 SMA to kind of curl up under price as well, and for us to move up and challenge that 200 SMA. This has kind of been the weakest long term, but we'll have to see if small caps can get some love as well and get back above those moving averages. Big volume here on this Friday, once again because of options expiration. Looking at the IWO, which is kind of small cap growth in particular, you can see that this was a little bit stronger than the IWM. You can see we held well above this previous low. and we have that kind of same pattern that all the major indexes had. We're right at that 21 EMA, and I want to see us kind of pop through that area and challenge that 50 SMA, 200 SMA. There's definitely going to be some profit taking, at least in the short term, when we kind of reach these key levels, because so many people are watching it. So once again, don't get carried away. Have patience. If you miss even the first few weeks of a strong rally, it's not the worst thing in the world. But you just got to be ready, pick your spots, manage risk, and practice progressive exposure. Looking at the FFTY, this is another index worth watching. Nice strong action. And you can see that we're once again right at that 21 EMA. So a lot of the indexes are right here. So it's kind of make it or break it here at this point. And we remain below a declining 250 SMA. And like the IWM, this index has gotten absolutely destroyed. Looking at the ARK fund, you can see that this is a little bit weaker. This has been decimated as well. We're not testing that 21 EMA. And there's just a lot of laggards overall in this index. And we remain in a stage 4 downtrend as of this moment. Moving on to kind of the mega cap names, let's start with Tesla. We basically undercut and rallied back above this key level. We had the gap down on earnings. You can see the metrics down here, decent numbers, but right now we're below all the key moving averages. Our decent action on Friday, but below declining 21 EMA, 50 SMA, 200 SMA is not the best look, and this could just be kind of a natural reaction of being so far extended below those levels. So until we kind of rally back above the 21 EMA and that curls up under price, this is still suspect in my opinion, and this key level is something definitely to watch if you're interested in this name. I know a lot of people are trying to bottom pick this, but once again, it's better to kind of wait for some initial strength, let the moving averages curl up under price, and then buy a breakout type buy or even a pullback into that moving average where you can manage risk against that key level. Moving on to Amazon, let's take a look at this chart. A little stronger than Tesla. We held well above these previous lows, and nice action on Friday here through the 21 EMA. We've got the 50 SMA as well as this previous high to keep an eye on, and also the 200 SMA looming above. Looking at Apple, let's bring up that chart here. Very strong action, off these lows here. Back through 21 EMA, we're right at this previous key level. 150 also will be an area of interest, as well as the 50 SMA once that eventually curls down here and meets price. Looking at Netflix, this I've been saying for a few weeks now. It got absolutely decimated here with these earnings gap downs. It was in stage 4 downtrend. Then we had a 4B minus, stage 4B minus setup per Stan Weinstein right here as it popped back through the 50 SMA. And actually over the previous few months, few weeks, we've had an increase in relative strength, and the RS rating is actually an 87, which is extremely surprising given its significant drop here. Obviously a lot of stocks have gotten decimated, but nevertheless, over the past few months, it's definitely shown something. And we had this key pivot, which we gapped above basically on that earnings gap. So you can see the earnings surprise was significant, even though the EPS reported wasn't too great. And we had one consolidation day when the market wasn't great, and then we burst through that 200 SMA here on this previous Friday. Let's go to a 60-minute chart here, because I think there's definitely some stuff we're studying here. We had a subtle undercut of this previous level here, almost kind of a pseudo double bottom, very short term obviously pattern. We had an outside day here, broke through this range, and then a super strong move throughout the rest of Friday. If you go to a 15-minute chart, let's actually take a look at that. You can see it a little bit more clearly. You can see this range that was formed here. We undercut this previous low by, I think, just a few cents, and then burst through that. And then we had another, higher low setup, short-term flag, whatever you want to call it, below this key level, which we burst through. And you could have even gotten a few points there. But nevertheless, a stock to watch, maybe a potential change in character. But keep in mind the longer-term trend, is still a little bit suspect because the 200 SMA is still declining. And I'd love to see a move up, a base to form, and then that 200 SMA to curl up under price, and then a really strong breakout on large volumes. So that's pretty much it for Netflix. Let's take a look at Meta, the last of the big names here. This is the worst looking of all of them. We're below declining 21, 50, and 200 SMA. And if you're looking to be in a mega cap tech name, I think, Google, Tesla, all those are slightly better options than Meta. And we just have to see where this goes. You can see RS rating is at 14, negative numbers here, deceleration across the board, and just a very strong negative price trend. So Yeah, that's pretty much it. Actually, we didn't even look at Google, so let's bring that up here. Decent action. Once again, very similar. Nice upside reversal on Friday, right at that 21 EMA, and the 50 SMA is curling down. So we'll have to see how it acts when it reaches that level. So that's pretty much it for those mega cap names as well as the market indexes. I'm going to be posting a video later today going through a whole bunch of names that I'm watching that are potentially setting up. So make sure that you tune in for that and subscribe below so you don't miss that. And let me know your thoughts below on this market. What do you think? I think it's really important to keep practicing progressive exposure. Don't get overly excited just because the indexes are moving up. Remember, it's more about kind of the internals. Are there potential leadership groups setting up? Are there promising setups that you can take advantage of and manage risk tightly? And just are there high probability plays existing in the market where the wind's at your back, both on a market, sector, as well as individual stock levels. So my current view is that we're in a tentative new uptrend. We of course got that fall through day signal per can slim on Friday on the S&P 500. I love to see a subsequent fall through day showing that it wasn't just OPEX that led to that volume. I really want to see stocks really develop and explode upwards. And of course, I want to see more leadership develop, which I'll talk about in that later video. So let me know your thoughts down below. Yeah, thanks so much for watching. I hope you enjoyed. If you did, go ahead and leave a like down below. It's completely free and helps me out immensely. And for subscribe if you haven't yet. And with that said, I'll see you guys in future videos. Take care.